Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 16th of December to the 20th of December 2019. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're going to be highlighting some of the targets that we're going to be looking for in this coming week and also for future weeks. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. Now, just before we start, just to let everybody know, we will be taking a break over the Christmas period, so there will be no Forex forecast for the next 2 weeks. So it'll be the first week, obviously Christmas week, and then after that we'll have the first week of New Year's. The next weekly forecast will be on the 4th of January 2020, where we will be back with a fresh mind after taking a nice break to start again. Looking forward to a new trading year. So with that said, let's take a look at the dollar index. Now, last week we were looking further declines to the downside in the dollar index, and we did come and take out the target set at 97.11. So very simply put, we're still looking for further declines to the downside in the dollar index. We have pulled back after a steep move down last week, and we're coming back towards a key area of broken support, potentially looking to turn resistance at 97.35. If we can come back, and preferably as always, if we can come back and retest this, it's going to be a great place to start to look for further declines to the downside in the dollar index. And we're going to be looking down towards the next key area of support to the downside in the target set, and the 96.40. As we are starting to trend to the downside in the dollar index, and we are currently structured to the downside, we will be going into next week with a bearish bias on the dollar index. So next market we're going to look at is crude oil. Now, last week we were looking for further advances to the upside, and we did start to get a move to the upside in crude oil. We did advance, but we did not take out the target set at 68.86 just yet. So very simply put, going into this week, we are still looking for further advances in this market. If we can get a pullback, and any pullback in this area, preferably as always if we can come back and retest broken resistance, turning support, this would be a great place going into next week to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and target set at the 60.86. And if we can get to break through here, we're going to be looking up to the second key area of resistance, the upside and target 2 at the 62.93. Just bear in mind, as we've said in previous videos as well, that crude oil is still acting in quite a choppy manner. We still have it in a larger overall corrective pattern, so it does come with slightly higher risk if you're looking to trade this market next week. Just bear that in mind. So next market we're going to look at is euro dollar. Now, last week we were looking further advances to the upside in this market, and we did have a really nice rally taking out the target set from last week at the 1.1162. Very simply put, going into this week, we're still looking for further advances to the upside in this pair. So if we can get a pullback, and any pullback in this area would be great, but preferably as always to get that best risk to reward, to get the better risk to reward setups. If we can come back and retest broken resistance, turning support at the 1.10770. This is going to be a great place next week to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 1.1199. And if we can get to break through here, we're going to be looking up towards the second key area of resistance, the upside and target 2 at the 1.1249. So next market we're going to look at is pound dollar. Now, last week we were looking for further advances to the upside in this market, and we did have a really big rally to the upside, taking out both targets set from last week to the upside. Very simply put, going into this week, we're still looking for further advances in this market. So very simply put, any pullback in this area, and preferably as always, if we can come back and retest broken resistance from the past, turning support in this case at 1.3163. This is going to be a great place going into next week to start to look for those bullish formations and patterns. We're going to be looking at initiating longs up towards the next key area of resistance, the upside and target set, the 1.3712. So the next market we're going to look at is US dollar Japanese yen. Now, US dollar Japanese yen is an interesting one because last week we had a bearish bias on the dollar index and the US dollar, and we were expecting to see a decline in the dollar, and we did get a decline in the dollar and the dollar index. However, despite this, we still saw the US dollar Japanese yen moving to the upside. And this is why we highlighted the 108.470, which, as you can see, is the bottom of this range here, as an area to start to look for a bounce to the upside. And we were looking at this more as a plan B currency last week. However, going into this week, it's a bit of a strange currency because we are still stuck between this range, closed the week back inside this range at the 109.39 and the 108.470, and overall we are looking for further declines to the downside. So very simply put, in the US dollar yen next week, we are still structured to the upside in this market, and we are back inside this range. We are looking potentially next week for a move back down to the range bottom. However, because we are still structured to the upside, we are not going to be primarily looking to trade these shorts to the downside, despite the fact we have a weaker dollar. The next time we would be looking at this pair is if we can come back down to the 108.470. This would be an area, once again, we would start to look for those bullish formations and patterns. And we'll be looking back up to the range top at the 109.39. So clearly this is a very choppy market going into the last trading week of the year for us. And with the combined lack of volatility and also the fact that this is structured in the opposite direction currently to the dollar index, there is nothing wrong with actually leaving this chart next week if you feel there are better markets to trade and better opportunities elsewhere. So next market we're going to look at is Aussie dollar. Now last week we started the week down in this area and we were looking for further advances to the upside in this market. We did have a really nice rally to the upside in this market, taking out both targets set from last week. First of all, the 0.6882, and then second at the second key area of resistance to the upside in the target from last week at the 6929, which you can see is still remains our first target for this week. So very simply put, going into this week, any pullback in this area, and we're starting to get one already, any pullback in this area is going to give us a great opportunity, especially if we can come back and retest broken resistance, turning support at the 0.6838. This is going to be a great opportunity to once again start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set, the 0.6929. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside in target 2, the 0.6996. So the next market we're going to look at is New Zealand dollar. Now, last week we were looking for further advances to the upside in this market, and we were looking towards a target of the 0.66250, which you can see we did come and tag last week before selling off. So very simply put, going into this week, we are now looking for further advances to the upside once again in this pair. If we can come back, and as always, preferably if we can come back and retest broken resistance, turning support at 0.65670. This is going to be a great place going into next week to start once again to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set, which was target 2 from last week, the 0.6683. So the next market that we're going to look at is US dollar Swiss franc. Last week we were looking for further declines to the downside in this market, and we did come and take out the target set last week at 0.9839. We still have the secondary target that we're looking to achieve from last week, 0.9701. So very simply put, going into this week, we're going to be looking for further declines to the downside in this pair. If we can get a pullback, and you can see we've already come back and retested broken support, turning resistance once at 0.98750, it would be nice if once again we could come back and just have another retest of this area as we get the best risk to reward setups. But any pullback in this area, preferably another retest, is going to give us an opportunity to start to look for bearish formations and patterns in this market. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and target 2 from last week at the 0.9701. So the next market we're going to look at is US dollar CAD. Now last week we had a really nice sell-off from the key area of resistance highlighted last week in this market, and in fact myself and TFT members are actually short from right here in US dollar CAD last week. Very simply put, we're going to look for further declines in this market, and we're going to be focused on shorting this market once again next week. If we can get a pullback, and preferably as always if we can come back and retest broken support, turning resistance at the 1.32250. This is going to be a great place going into next week to once again start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside in the target set, the 1.3120. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside in target 2 at the 1.3038. And last but not least, we have gold. Now, last week we started the week in this area, and we highlighted in last week's video that we were looking for a rally in this market to the upside in gold into the key area of resistance of the 1481.39. You can see that's exactly what it did last week. We had this rally into this target last week before selling off, and we finished just below here. So very simply put, going into this week, especially as we're looking for further declines in the dollar index, if we can get a pullback, and once again, if we can come back and test the bottom of the range here in gold at the 1458.22, This would be an area we're going to once again start to look for those bullish formations and patterns. And we're going to be looking at initiating longs back up towards the top of the range of the target set from last week, and once again the target this week at 1481.39. And if we can get a break through here, or if we can get a break straight through here like this instead, this would be the second thing that we'll be looking for next week. This will either here or here provide a great opportunity to start once again to look for those bullish formations and patterns. And we're going to be looking up towards the next key area resistance, the upside and target 2, the 1498.45. So that is it from me for this week, guys, and indeed this year. I want to wish you all a fantastic week next week. I want to wish you all a great weekend, and I want to wish you all a Merry Christmas and a Happy New Year for those of you celebrating. And of course, I want to wish you all a nice, refreshing break before the new trading year of 2020. So with that said, guys, all the best to all of you. We will see you again in 2020 on the 4th of January. And as always, take care and don't forget to trade safely.